This is a sum on change in PSR where we have old partners changing their profit sharing ratio from 5 is to 3 is to 2 to 2 is to 5 is to 3, and we have the following adjustments that needs to be done. Let's pick up one by one. The first thing that we have is the debit balance of profit and loss account. Okay, that goes here as a negative figure for our calculation purpose. We have general reserve of 24,000, so that comes here as a positive figure. We have revaluation adjustments given here. We have goodwill as well given here, 30,000. So let's write that down. For revaluation, we have to prepare the revaluation profit. The land having book value of 50,000 to be valued at 80,000. That means the value of land is increasing, right? So it's 30,000. Then we have the stock, which is to be depreciated by 6%. The book value is 50,000. So that comes on the debit side, which is 6% of 50,000. That comes to 3,000. The creditors amounting to rupees 400 were not likely to be claimed, so that comes on the credit side by creditors. The entire 400 comes here. We have the unrecorded investments to be valued at 22,600, that to be brought into the books. So by unrecorded investments, that comes to 22,600. All right. So if 53,000 is the total, that means to revaluation profit is 50,000, right? So this one is done. We put that here, up here in the calculation, 50,000 as revaluation profit. Let's do the calculation here. The sum we are getting as 1 lakh. So out of that, you have to calculate the gaining ratio and the sacrificing ratio. So if the old ratio is 5 is to 3 is to 2 and the new ratio is 2 is to 5 is to 3, then in that case x is sacrificing 3/10, y is gaining 2/10 and z is gaining 1/10, right? So the both the gaining partners will contribute, will compensate x for the sacrifice, right? So here out of 1 lakh, what is x's sacrifice, which will be straight away 1 lakh into 3 upon 10. Okay. Similarly, we have to do it in that case for 30,000, that will be contributed to x by y and z in their gaining ratio of 2 is to 1. That means that becomes 2 by 3, and for z this becomes 30,000 into 1 by 3, 10,000. Straight away then the journal out of this will be y's capital account debit, z's capital account debit, 2x's capital account. All right. Straightforward. Just be careful about the adjustments. This will be 20,000 for Y, 10,000 for Z, and 30,000 for X. Narration straight away you can write being adjustment made, being adjustment journal for change in PSR, crediting excess capital account and debiting Y's and Z's current capital account, right? Okay, so this becomes the journal, this becomes the answer.